All right, back here with the third part of the stock market, and I just want to go over some stuff here with you guys, and just kind of get into how you buy stock. Okay, so talk a little about what stocks are, what's capital gain, what's capital losses, different things along those lines. But as far as I'm concerned, that stocks are bought and sold through brokerage firms or on the internet. Okay, so brokers are on the internet. Most of the time, they're sold through the internet. So we have like E-Trade, Ameritrade, all these different trading companies where you can actually go on there and buy shares of businesses. Okay, that are selling them at that point in time and for a certain price. Okay, so a broker acts as a go-between for buyers and sellers. So a stockbroker, financial advisor is can be considered one. If the investor is interested in buying or trading corporate shares, they can contact a brokerage firm that will sell shares for a fee. Okay, so you'll get charged the interest, and they'll buy them for you and then sell them to you for make money off commission off you. So buying and selling stocks daily for ordinary investors, the fees depend on how much they are buying or trading. Charges may be as high as $500. Many investors go through internet brokers. The cost for the same trade may be as low as $7. So they're basically just trading in and out shares. There's an average of over 100 brokerage firms on the internet. About 20 million Americans use the internet to make trades every day. Like I said, TD Ameritrade, E-Trade, Merrill Edge are all different things. You can get an account when you're 18. You can sign up. You deposit money from your checking account in there, and then you can use that money to buy shares of businesses. So, for example, things like Pfizer, who just came out with the vaccine, people are throwing a ton of money buying as many shares as they can right now, which so as people buy shares and they get more money as they gather more money, the stock inflates, okay? Therefore, the price goes up, so people are immediately making money on it, okay? Stock exchanges, there's a couple different ones. The brokerage house communicates with the busy houses of the New York Stock Exchange. Brokerage house will buy them from the New York Stock Exchange. New York Stock Exchange, if the businesses belong to the stock exchange, that's where they put the pieces of their business up for share, okay? And then the brokerage firm can buy those and then sell them to people, or you can buy them right from there, okay? So like, for instance, how do you buy shares off of TD Ameritrade? Well, TD Ameritrade goes to the New York Stock Exchange, they buy shares, and then they resell them to you for a slightly higher price. That's how they make money or commission for doing that. They act as the financial advisor, as the go-between. This formed, they merged with Euronext, which is a major stock exchange in Europe in 2007. This formed the New York Stock Exchange and Euronext conglomeration of the two. There's also other stock exchanges in Chicago, regional locations in other countries, London, Tokyo. So there's a bunch of them. To be listed on the exchanges, a corporation must prove to the exchange that they are good financially. The SEC, Securities and Exchange Commissions, are the ones that regulate this. This is a governmental regulation company that makes sure that the business that is selling shares of stock to you that are a part of these exchanges are full and they're good. They're not made out of credit or installment payments like they were in the raging stock market, in the raging bull market of the 1920s. Most companies traded on stock exchanges are among the largest, most profitable corporations in the country. Okay, we do have over-the-counter markets as well. Over-the-counter market is an electronic marketplace for stocks not listed on the organized exchanges. These are more risky stocks that people may be buying. Okay, the largest volume of over-the-counter stocks are quoted on the National Association of Securities Dealers Automated Quotations, which is known as NASDAQ market system. You can find those on your phone when you go to the stock market. There's also the American Stock Exchange, which is part of the New York Stock Exchange Euronext. The over-the-counter markets, unlike organized stock exchange, over-the-counter stocks are not traded in any specific place. Brokerage firms hold shares of stocks that they buy and sell for investors. Okay, some of them may be higher risk, some of them are lower risk. Okay, so it's kind of up to you what you want to buy. So how you buy stocks, okay, here's the example I give my kids. Assume company XYZ Corporation is a company that sells computers. If an investor wanted to buy stock, he or she would check the NASDAQ listing in the local newspaper on the internet. The table of the over-the-counter stocks would list XYZ Corporation, number of shares of stock sold the day before, and the price at which the shares of stock sold that day. The investor would then call a broker or use the internet to buy the certain numbers of shares. Usually we're using the internet nowadays, and usually stocks are sold in an amount of 100 shares or 10 shares. 10 shares is considered a round lot, but some brokers will handle smaller amounts at this point in time. The stock market indexes indicate what the stock market's doing that day, if it's going up or down. We look at this. The Dow Jones Industrial Average is on your phone. You can check it right now. If that's going up, that means the 30 major industrial companies in the United States of America are doing good. If it's down, that means that's down. We also have the Standard and Poor 500, and then we have bond markets. You can invest in bonds, which are government bonds, so on and so forth. These are less risk, okay, and so on and so forth. What a financial advisor will do is he will create a mutual fund for you, and you can kind of choose if you want to go high risk, middle, or low risk, and they will basically create a mutual fund, which is a mixture of stocks, bonds, risk, and no risk stuff, and they'll make sure that you make a high percentage of money. Like I said, which is usually 6%. Like I said, the government regulates it through the SEC and investigates all this stuff. And that's it for today, guys. If you have any questions for me, let me know. This is just a rundown of how we sell and buy stock. Okay, and this is the way that you're going to make money in your life through 403bs, 401ks. This is really how you do it on an average of 6% a year you will make. All right, guys, have a good day.